Most of us are taught that great investing is all about finding that one breakout stock. The one that's going to change everything before anyone else does. But what if I told you that the top professionals are playing a completely different game? Today, we're opening up their playbook, and we're going to move way beyond just picking stocks to see the system they use for real portfolio mastery. So let's just start with a question. What if that endless hunt for the next big thing, the part of investing that gets all the headlines, what if that isn't actually the key to building real sustainable wealth? What if the secret is kind of hiding in plain sight? Well, here it is. This is the secret. Study after study shows something pretty staggering. About 80% of your investment returns, they don't come from picking the perfect stock. Nope, they come from your asset allocation and your risk management, the big, strategic, structural decisions. That means stock picking, the thing we all obsess over, accounts for only about 20% of the results. That's a huge fundamental mindset shift right there. This just flips the entire script. See, the professional secret isn't about what you own, it's all about how you own it. The focus moves away from just hunting for assets and shifts to building a reliable process, one that's based on structure, systems, and, you guessed it, discipline. So, what's the bedrock of this whole professional mindset? It's one single foundational rule that honestly changes everything. You have to protect your capital. You've probably heard this iconic quote before, right? But in the world of professional wealth management, this is not just some catchy phrase. It's a mandate. Before a pro even dreams about returns, their number one job, their primary focus, is on systematic risk management to preserve the capital they have. Everything else, it comes second. And this reveals this huge split between two different mindsets. The amateur is almost totally focused on chasing returns, going for the big score. The professional, they flip this completely, focusing on capital preservation first. So why do they do that? Because they get a crucial piece of math. Avoiding a big loss is way, way more powerful for your long-term growth than capturing a big gain. Okay, so how do you protect your capital? Well, you build a financial fortress. You build a structure that's designed to withstand any market, not just, a random collection of good stock. And the blueprint for this fortress? That's your asset allocation. By strategically mixing different kinds of assets that don't always move together, things like stocks, bonds, and alternatives, you're creating true diversification. This becomes your first and, honestly, your most powerful line of defense. And what about the walls of your fortress? That's your risk framework. And we are talking about some pretty sophisticated techniques here that go way beyond just a simple stop loss. Professionals are running portfolio stress tests, creating systematic risk budgets to know exactly how much risk they're taking on, and using advanced metrics to make sure their diversification is actually, working. All right, so with the fortress designed, we now need a plan for every single soldier inside it. And this brings us down to the tactical level, smart position sizing and having strategic exits. Professionals don't just guess how much to invest in an idea. They use systematic methods, like the volatility contraction pattern, or VCP. It's a technique for spotting when a stock's price settles down into a really quiet, tight range, which often happens right before a potential breakout. They assess the pattern's quality, they confirm it with trading volume, and then they scale into the position. It's a science, not a gamble. And hey, getting out is just as important as getting in. A professional's exit plan is so much more sophisticated than a simple price alert on your phone. They use things like trailing stops that actually move up with a stock, stops based on a stock's own volatility, or exits that are tied to key technical levels. They'll even scale out of their winning positions to lock in profits along the way. Okay, finally, we have the playbook's most advanced layer, systematic market timing. Now, this is not about predicting the future with some crystal ball. It's about understanding the big economic picture and positioning your portfolio to take advantage of it. Professionals pay very close attention to the economic cycle. They know that different types of investments do better during different phases, like expansion, peak, contraction, and trough. By figuring out where we are in the cycle, they can systematically rotate between different sectors, optimizing their portfolio for whatever the current economic environment is. So when you start putting all these pieces together, the capital preservation, the fortress construction, the smart tactics, the market awareness. You go through this really fundamental transformation. You stop being just a stock picker and you become a systematic investor. See, where the stock picker is always hunting for winners, you are building a system. Where they are emotional and reactive, you are rule-based and proactive. Their goal might be a quick return. Your goal is sustainable, long-term wealth. It's a whole different game. When you adopt this playbook, it means you're not just collecting stocks anymore. No, you are designing and managing a robust, complete financial system. You become the architect of your own financial future. And that really leaves us with one final and I think essential question to ask yourself. Are you truly managing a portfolio with a process, a framework, and with rules? Or are you just collecting stocks and hoping for the best? The answer to that question could change everything. Thanks for joining us for this explainer.